Came in thinking that a lot of the good news was priced in?
Look, I don't think 100% of the good news on U.S.-China trade is priced in, but I do think it's maybe 70 or 80%. I mean, clearly, any news that we get to suggest that, yes, we are headed for the deal signing in middle of November, I think is going to be positively interpreted by the markets. The reason I was saying that a lot of, the outlook for equities is contingent on positive developments with China, because if you look at the consensus numbers, they're calling for double-digit 11% upside for 2020. You don't do that if you expect the U.S.-China to fall apart. But what I think can, to your point, cause the breakout in this market, if we actually start to see the data turn around, if we start to see the uptick in PMI numbers. By the way, global PMIs have, I think, tentatively troughed a couple of months ago.
I was going to ask you that, if you think there's been a bottom.
Yeah, I think we've seen it 2 months ago. And historically, after the Fed cuts, you have about an 8-month lag. And if that's the case, then sometime by the beginning of the first quarter, the end of the first quarter, we should start to see better numbers. And if I look at the consensus GDP numbers for 2020, they're calling for 1.7% growth, which is really not much. And it still is slowing from where we are today. So this is why I say that any growth uptick that we get is not yet in the price. And that's why semis have rallied a lot. But there's many things out there, like cyclicals, like value, like small caps, that have some catching up to do.
All right, so just so we know where we all stand, right? 30.2798. 30.2798 is where we have to get for a new all-time intraday high on the S&P 500. So we're going to keep our eye on there. You see, we got within a point, turned down a little bit, but we're all over that. All right, Yana, earnings been good enough?
I think
Fed
so.
is your friend?
Absolutely.
Positive headline, even incremental with trade, takes you where?
I think 2019 will be known as a year of reset. We've had a nice reset for the earnings expectations. Q3, we are coming in, and the market is expecting down almost 5%, and that's been better than that. I think you have something like over 85% of global monetary stimulus across the board. That's been a nice bogey for the market as well. And listen, the market has done a lot of work. It's up over 22%, but average stock is actually trailing, which tells you we have a little more room on an individual basis, particularly in areas that have lagged, like cyclicals and healthcare in particular. So I think this is a great time to be a stock picker and to find those dispersions that are actually expanding, meaning individual returns of the best performers to worst performers is actually growing, which is a great time to pick stocks.